And now I think that I've spoken with companies that are like, how do we do like an option on our metal? There's a major company building a mine in Mexico that says we don't want to sell our silver because we're not going to get enough at this market price. But what if we make an option product out of it? And so they're looking to, basically, I think the final destination of that will be tokenizing their silver.
Welcome to Gold Silver Pros.
Yeah, so from my perspective, looking back at 2022, I think gold and silver actually held up pretty well. There was, I feel, a large sort of margin call or liquidity event that happened across the markets. We certainly saw pressure in the Dow, the S&P, the NASDAQ. Bond rates have been going up, which is not good for existing bondholders. It drives down the value of their holdings, so we don't like to always see that. And so a lot of the markets were not as ebullient and not as strong as they've been in the past. But gold and silver here look like they're going to end up the year even slightly up. They were down until the last couple of weeks in which we've seen some support in both the gold and silver price. I think we're going to end the year very positive. And I think if you're, a Bitcoin investor or a stock investor, a bond investor, you may be feeling the pain right now. But if you had been in precious metals this year, you actually held up okay, and probably, no worse for the wear for having done that. So I think this year's been really good for gold and silver and proving that there's still assets that people flock to in times of uncertainty. And certainly I think this year they proved that.
Okay, if we look at the role of gold as a safe haven asset, as a preserve of wealth for investors, my question would be, is that challenge, because there were conversation about how Bitcoin is going to be the new gold, is the long-term function of gold challenged by Bitcoin?
I guess I'll jump on that one real quick because I own both. So I do some Bitcoin mining. It's not one of my primary investments. I do it as a speculation, so I've been involved in that market for a while. And of course in gold and silver for a very long time. And I do think in the last cycle, Bitcoin did get a lot of attention. I think we saw early on cannabis stocks are doing very well. That was maybe a bit more of a fad until that market got saturated. But Bitcoin continued to do well. And not only that, but now, Steffi, we have over 20,000 cryptocurrencies. So it's not just Bitcoin. There's a whole complex of cryptocurrencies out there. Obviously, Bitcoin, Ethereum, Monero, those types dominate the market. And they did capture a lot of attention. And I think they did take some money away from the space. I think in the last cycle, we didn't see as much investment in the resource stocks as we typically have, for example. And so I do think that there is sort of an either or factor. There is a limited amount of money in the world, and investors are going to go to what they have interest in and what they think is going to do well. And I do think that some of that money that may have gone into the gold sector has gone into Bitcoin. The interesting thing to see will be what is the messaging coming out of the gold sector. Is the gold sector going to rally around and say, hey, we did better than Bitcoin this last year. Look at the value that gold really has. We've proven our point of this 5,000-year history as a monetary asset and safe haven. And that should be the messaging out of the gold sector. And I think if the gold sector goes to that messaging, then I think people will respond. And I think people will come back to gold and silver. But it's really the messaging. I think, honestly, the Bitcoin community is very good at messaging, and it's something the gold community probably could take a page out of their book just a little bit.
It's kind of, Rob, what are your views on that, on this topic? How gold is going to be tokenized? And also, I think another point that is very important is about regulation. That now is the main, is the main topic in the crypto space, and is very important for mass adoption, but also for kind of making these tokenization of assets a reality.
Yeah, I think if you look at tokenization, I think everything in the world eventually will probably be tokenized. If you look at efforts like the Chinese. They are really big on smart contracts, and when you tie smart contracts, which are electronic contracts, just like a contract, but it's electronic, it's tied to the blockchain, and you tokenize an asset class like T. I think they started with T and made a T token. They've tokenized their T, and that token in the smart contract is what governs that transaction, and it has a tremendous boon for a functioning economy. It makes things faster, it guarantees quality, it leads to instantaneous settlement of contracts, it keeps things out of the court system. It does a lot of positive things. And I think that tokenizing gold makes a lot of sense. I think Mark is correct. And I think companies like Kinesis have started to do that. Loadcoin, those types of precious metals backed digital coins that are not really like Bitcoin currency. It's more towards like a stable coin, although they're backing with precious metals. And I think that is a big part of the industry. And I think getting the newer generations into gold and silver, that's a pathway to do it because they like the electronic trade, they understand it, they're online, it makes sense with them, And like my kids, for example, really are interested in these types of products and getting into gold and silver, for example, in their generation. And I think if you look at the history of mine finance, because mining is so cyclical, especially the precious metals is a very cyclical market in terms of price and investment. But a lot of things have happened along the way to kind of help the miners out. There was the royalty streaming model, which brought them money. They had to give up value to do it, but it brought them money when they couldn't get it themselves. And now I think that I've spoken with companies like, how do we do like an option on our metal? There's a major company building a mine in Mexico that says we don't want to sell our silver because we're not going to get enough at this market price. But what if we make an option product out of it? And so they're looking to basically, I think the final destination of that will be tokenizing their silver. And so I think that individual miners are now looking at how do we get more value out of our asset.
That's such an interesting topic. So we can kind of like make the gold industry more innovative and younger as well, because when you're talking, to young investor, that's what you said, Rob. They said, "Oh, gold, no, it's old. We prefer Bitcoin."
But your perspective on physical demand right now, deliveries off of COMEX LBMA. You also mentioned the Shanghai exchange, their deliveries there. So I know you've mentioned in the past how we're really entering silver squeeze number 2. Can you expand on the physical demand we're seeing across the board and how that's going to be impacting the price?
Yeah, so physical demand across the board for silver. I'll focus on silver here because gold, there's a lot of above ground gold, right? So it really takes a lot to kind of move that market from a physical perspective. And usually gold, it's more of a trade around safety. It's more of a trade around sovereign central banks gobbling it up. People get involved. I mean, there is a portion of that market that is demand for industrial use. But most of that market's either going to be jewelry, which I would argue is a form of long-term investment, bars and coins, and just stockpiles of gold, really, that people use for assets like central banks and commercial banks for Basel III. Silver is a different animal. Most silver ever mined is used in very small quantities across a wide variety of products that often get buried in landfills. And so it's still there. It didn't get destroyed, but it's extremely costly to try to go mine that stuff out of landfills. It's more costly than it is to pull it out of the ground, pull it, get it from Mother Earth, essentially. So I honestly think silver could be really the one to watch here. And again, as I said at the beginning of the program, all year long, actually dating back to silver squeeze last 2 days, January, first day of February last year, we've had big players pulling silver out. And I think originally a lot of it was industrial demand. Because if we think about what the Silver Institute has been reporting, 2022 is now year number 4 in shortages. And they're predicting in 2023 that we have a record shortage of 194 million ounces between what the miners are producing and what we actually use as a society between industrial and investment. Now think about that for a moment. 194 million ounces, you could drain most of the free silver on both COMEX and London exchanges just next year with that deficit in mine production. And if you look at what's going on in Shanghai and the amount of deliveries over there, that number could actually go higher. So you could actually be looking at a market in 2023 for silver that does not have any publicly well-known large silver stockpiles that can be used to account for shortages. And I think at some point in 2023, the shortage situation in silver is going to come to a head, and you're going to see officials start talking about it. I think industry will talk about it first, and then I think officials are going to start talking about it. And if we end up going deeper into a worldwide recession, let's say Europe starts to go into a deep recession this winter as a result of energy situations and basically a debt load, then you can start to see a situation where people flood into silver from an investment perspective. The key question for 2023 that I have in silver is, if we go into a recession and there's a reduction in silver use for industrial purposes, will the investors, because we're in a recession, demand more silver for investment? And if they do, that's it. I think silver probably starts to break next year, because if Silver Institute's right, if their prediction is right, and we need about an extra 200 million ounces of what we're producing, then that is going to roil the silver market, because the last 2 years we've been draining our above ground stockpiles. And again, unless silver goes to 50 to 60, 70 bucks an ounce, you can't go get it out of the landfills. It's not cost effective. So that all the factors point to silver rising. It has to at some point, or manufacturers are going to come out and say, I have no silver. And then what's going to happen is what happened to LME and nickel. It's going to go vertical. They're going to stop trade. And literally there's not going to be a spot price on silver. It's essentially going to be an unpriced market. And that's something that has a potential to happen in 2023, maybe 2024, unless we have a bunch of new mines all of a sudden just mysteriously come online and start cranking out a couple of hundred extra million ounces of silver. Most silver does not come out of primary silver mines. It comes out as a byproduct of copper, gold, these other polymetallic base metal mines. And so if you look at the supply chain and we go into a recession and those mines can't operate because they don't have income, and you start shutting down copper mines and gold mines and lead mines, 72% of silver comes out of as a secondary metal out of those other mines. And so if any of those mines start to retract their silver production, then it gets massively worse, Elijah. And it can take anywhere from 2 to 7 to 10 years to ramp up new primary silver mines. And there aren't that many great silver deposits in the world. A lot of them are in Mexico and Peru. You got some sprinkled here or there, but it's not like there are a whole bunch of them. So I think really, I know this is a really long answer, but really 2023 could be the year for silver. That's a big one, and we're just going to have to watch it. There is really a brewing situation with supplies, and it's starting to get pretty darn serious.
Now, if you could maybe help our viewers kind of put this in perspective, because we do have a question from Sarge about what the number of available ounces of gold and silver are above ground. You're talking about how there's a supply deficit that the Silver Institute is reporting on. That matters, obviously, if there's not a lot of just excess supply. And you mentioned that that supply deficit could drain the COMEX, could drain the LBMA, alone. But what is your knowledge about the above ground silver supplies? And also we can touch on gold, but silver first.
Yeah, this is a difficult one because some of the people who have been in this industry for the longest are, 𝘎𝙀𝘀 McLeod, people who are really focused on this, Ed Steer, Ronan Manning, guys have been following us for a long time. I've interviewed most or all of them recently, talked to a lot of them. And, it's a really opaque market. So if you look at how COMEX operates, if you believe all the inventory data on COMEX, you have a fairly good idea in the registered category of what's liquid. The big bugaboo on COMEX for both gold and silver is the eligible category. The CME Group came out and admitted, along with the CFTC, or to the CFTC in a memo last year, I believe, that if you looked at all the eligible stocks of gold and silver on COMEX, they don't know if half of it is free or because it's private owned. They don't know what that silver's been accounted for. The exchange does not. The eligible gold and silver does not get reported to the exchange in terms of what's free and what's not, because those are private contracts. The only way that you could get more gold and silver out of eligible is one of those private holders then said, okay, I'll give it up at the current price. And on silver, they're not going to do it at $23. I can pretty much guarantee you. But we don't know how much of that's liquid. That's the problem, because a lot of what goes on the gold and silver market, it's private contracts. If you look at London, there's something like 830 million ounces of silver left in London if you go to the LBMA's website. The majority of that is an ETF. So if I look at ETFs right now, there is hundreds of millions of ounces pledged to ETFs, the SLB, the Deutsche Bank, Bullion Vault. A lot of these ETFs store in London, not all. And a lot of that silver is accounted for. And if you look at the silver that's been run off of the London market, you're talking over 100 million ounces in a very short period of time. And if you're dating back to last year with Silver Squeeze, because Silver Squeeze was was investing in SLV. SLV stores their silver in London. So what happens, a lot of that free silver in London got put over into SLV. And not all of it's come back out to be free silver. Then, of course, you got Shanghai, and they don't report what's free and not. It's not even on their report. They just tell you what the deliveries are, what the contracts look like, what the prices are, but you don't even get a view into that one. And then we're even talking about private stockpiles around the world. There are religious organizations, companies, manufacturers. There are some miners that are holding some back. So honestly, there is no way to know. Unless you had a reporting requirement for every miner and every depository and every private citizen family office to report the holdings, we really don't know what's available. All that we can do is kind of look at the big numbers on the big exchanges and do the best that we can with those and make some assumptions. And it's very clear that of the transparent, reportable free silver, it has just been whacked. And there's not a whole lot left. I don't have a number for you on what it is, but it's let's put it this way. It's a heck of a lot less than we've had over the last 4 to 5 years, that's for sure. And if we keep going down the path we're gonna run out. And the only thing that would save us is if a lot of that sitting, in London and in COMEX, if people say, okay, I'm going to let that silver go. But the key there, the key there is that silver really free? That silver could be pledged for some other purpose. It could be pledged to a company to use it. It could be pledged to an investor who's just storing it over there. We don't know. So nobody really knows. But we do know the freely reported silver has come way, way down. Gold, there's a lot more available. That's why I'm more bullish on silver for 2023. The thing that will pop gold for 2023 is going to be the central banks. If we have a deep recession and the central banks start gobbling up gold again, they're the biggest buyers. That will pop gold really quick. If we see any of the sovereigns come out and report that they're interested in gold, or if we see a big investor say they're interested in gold, that will pop gold. But I think silver will be the bigger move in 2023. I'm uber bullish on silver because of the actual supply demand fundamentals.
To begin, I'd love if you could share some of the things that you've been looking at on the Chinese market that people hear less about, and maybe we can start there.
Yeah, the Shanghai's been an interesting one, I guess, ever since last year. I did that report at Silver Symposium about how JP Morgan is helping the Chinese to expand out their commodities markets. They've dealt and trade in a lot of commodities here for quite some time, although they hadn't had a fully functional exchange, I would guess, in comparison to the exchanges on the West. So they've been working on that for several years. And they've increased the amount of people that have signed up basically to trade on that exchange. You get a lot of the major international players are now involved, the major international banks, and have been for a while. And so they've always been trading the precious metals or expanding into different forms of energy and other commodities. And they're becoming a little bit of a powerhouse, I think. One thing I've noticed with regards to precious metals market is they're more heavily physically traded. So whereas on the COMEX or the London markets, there's a portion of the contracts or the trades that will eventually settle in a physical position, it's really a small percentage. And that those markets weren't really designed with the intent to be physical delivery markets in the beginning. I think this is something that Craig Hemke and TF Metals points out all the time. And my research indicates the same. The derivatives markets really originally were for hedging and have turned into mostly a speculative market. However, I do believe as the precious metals have been harder to come by, and they are, that people have been moving over to derivative markets to take delivery. I think a lot of that was originally industrial demand, but I also suspect that some of it is now investment demand. Now that we're looking at what's going on in the world and what looks like a potential deflationary environment coming and potential deflationary spiral. And so I think people are using all of the markets more for delivery. But in the Shanghai market, they have a much higher percentage of contracts delivered. It's up in the 70% range for gold, and silver is pretty high there as well. And so there's a lot more physical deliveries. Yeah, I think on the latest report from the Shanghai market, I guess, in gold at 69.7% delivery, and silver almost 17%. That's actually down a little bit from previous months. It was a little bit higher. And you can see the yearly cumulative total ratio down there is a little bit higher, 72. In silver specifically, though, the average for the year has been about 10%. The last couple of months, it's been either 16. I've seen as high as 20%. So there's definitely more of the trade in China on the silver market is being physically delivered, even though it's a heavier physical market to begin with. It's become more heavy. And there are probably a few things we could take away from that. We could take away the fact that people know that it's a physical delivery market, and if they need to get physical delivery, they're going to go there, because on COMEX, not everything has to physically settle. You could settle for cash, the contract could be rolled. And my understanding is both the exchange and the trading partners on COMEX have the ability to negotiate that out. So there's no guarantee that if you stand for delivery, you get it. There are different cases or reasons why that may not occur. But Shanghai has always been one that was easier to get that physical delivery. It's more of that physical delivery market, and that's probably because it's not considered the market that determines spot price, and so therefore the players are there maybe less for the speculative trade and maybe more for physical delivery, and so you see those amping up and you see people going over there. And I think when you look at that combined with the fact that we've had in silver specifically, a lot of silver ounces run off of the COMEX and London. They're no longer, and we're not talking about just taken out of COMEX, taken out of registered and eligible private storage. I mean, we're talking about taking off of the exchanges and the depositories. It almost seems as though either the metal is moving west to east and it's going through the Shanghai markets, or perhaps people just need so much of it, they're draining it everywhere they can get it. So either the metal's flowing west to east, or the metal's just being literally absorbed by the world market, which is probably more the case. And it's just another indication, Chris, that silver supplies are getting really tight. And you know, we don't know where all the silver sits. Of course, there are private contracts and private held, reserves of the precious metals, and from people that have been wise over time and knew that we would get to a point where they would become more valuable. So there could be some additional ounces out there that filter into the market. Certainly, we've seen some selling on COMEX as silver's reached 23. I think there was 4 or 5 million ounces that got sold back into the COMEX over the last few weeks, given that price rise in silver. But it's a drop in the bucket according to what has run off since silver squeeze of last year. So that kind of tells me from a price sensitivity perspective, we could go $25, $30 silver. And yes, some people will dump silver, but you're not going to dump enough to meet the demand. And what is the demand? Or the net demand would be 194 million ounces. If you look at the Silver Institute for this year, they revised. Originally, they thought it was going to be 116 million ounces short this year. In their November interim market report, they said 194. So it's 194 million ounces that the market wants that the miners can't produce this year. And I think you see that number by Silver Institute, and you see the numbers of the ounces coming off of the exchanges, including now Shanghai. And it's pretty easy to see where we're headed for a deficit. And it's pretty easy to see why the world needs silver. And so even if people had some stockpiles of 100 million ounces, I don't even if they dump that in the market, I don't think it's going to move the needle very much on price. I think silver is incredibly price elastic because of the way that it's used. And I think the price can march as high as people need it to resolve those shortages. And I think that's what we're looking at. We're looking at the shortage stage now. And then when the market realizes it, when they can't get the silver, I think is when you're going to have where you see the price kind of go nuts at some point, and people are going to bid that up as high as it needs to go. Because if you need to build your satellite, or you need to build your electric vehicle, or you need to build your medical implement, or you need to build your iPhone, and silver is a half an ounce in each one of those, if you pay 4 times the amount, you're going to do it because you need it. But multiply that over billions of times from billions of different products in the economy, and that's where you can sustain substantially higher silver prices. And silver being such a small market, it can get bid up very quickly when people need silver, when money flows into that space. Then we're not talking about the gold market, which is much bigger, or even like the bond or stock markets, which are huge, or real estate market, which is huge. Silver is a really tiny market. So any additional amount of demand certainly could send that market price spiraling upward. I think China is going to be a very, very big, and not only Chen says this, but in my own research as well, China is going to be the elephant in the room. They're already the elephant in the room. They're just bulldozing their way ahead. You have the Belt and Road Initiative. You have the establishment of alternative currency markets. China and Russia and the BRICS nations are doing alternative currencies. China's rising right now. It's pretty obvious. And they have really become, the counterweight to American and Western influence. And so I think you're going to start seeing some changes. We've been living in a very Western world for a very long time. I think we're about to start living in a mixed world where we get a little bit more Eastern philosophy, Eastern trade, and Eastern thought. And I think that's something that people should probably start paying attention to. China's here to stay, and what they're organizing is for the long term. They're not going away anytime soon. This is not a flash in the pan. They're not a paper tiger by any means. They are still fragile enough where they're at to where they're not out of the woods in their own economy, but you can certainly see the foundation that they've been laying. And if you want to know where the world is going financially, I think over the next 50 years, you're going to look toward China before you look to the US.
Hey, thanks for watching. We selected these videos just for you. Check them out. And remember, $4.99 a month keeps the lights on and the channel going. So join our Gold Silver Pro supporter membership. We appreciate your support. Keep stacking.